Did you notice how the markets have been down today? And it's just not the Indian markets. The US markets have also fallen by more than 3%, marking the worst performance in months. So what's really going on? Well, this is tied to three major factors: inflation, interest rates, and the Federal Reserve. We will break this down for you. Now, while the broader market has been down, there's been some positive action in the IPO space. Despite the market slump, some IPOs have seen strong listings, which we will also go over. And today, 5 IPOs have been opened. We will briefly go over these IPOs and see what's on offer. The US Central Bank, which is the Federal Reserve, has cut its key interest rate once again, this time by about 25 basis points, making it the third rate cut this year. Now, their benchmark rate now stands at 4.5%. While they've reduced rates this year, they're signaling that they'll slow down on rate cuts next year. In fact, for 2025, they now expect only 2 rate cuts instead of the 4 they had predicted earlier. Now, the main reason is inflation, which is still running high in the US. Now, inflation rose by about 2.7% year over year in November, the highest jump in 4 months. The Fed aims to keep inflation at around 2%, so this is a bit of a concern. Now, to fight inflation, central banks such as the Fed or the RBI raises interest rates, which increases borrowing costs for things like home loans, car loans, and credit cards. Now, this also tends to slow down business expansion because borrowing becomes more expensive. Now, we've talked before about how Trump's policies can have a big impact on the economy. Now, tying this back to Trump's policies, the Fed chair also mentioned that the path of inflation has become trickier since the elections. Now, policies like imposing tariffs on imports could also make inflation worse next year. So Wall Street didn't take the news well. The markets had their worst day in 4 months. S&P fell by 3%, Dow Jones dropped by around 2.5%, and the Nasdaq fell even more, about 3.5%. And you know what they say, when America sneezes, the whole world catches a cold. The Indian markets also felt this heat. The Nifty 50 dropped by around 1%. This is mainly because foreign institutional investors, who make up a big part of the trading volume in Indian markets, started pulling out their money, leading to sharp decline in stock prices. Now, why is this happening? Let me explain. When the Fed lowers interest rates, borrowing in the US becomes cheaper. This encourages investors to look for higher returns in other markets, and that's where emerging markets like India come into the picture. As foreign investors pump money into Indian equities, it often leads to a boost in the stock market. This influx of funds lifts market sentiment, benefiting companies across different sectors. But what happens when the Fed keeps interest rates higher than expected? Well, the opposite effect kicks in. High rates makes the US market more attractive for investors, pulling money away from emerging markets like India. Now, this can dampen market sentiment and slow down the flow of foreign investments into Indian equities. So what are the key takeaways of the situation? We knew that the Fed would cut interest rates by 25 basis points, but what's worrying the markets is their hint at slowing down the pace of rate cuts in the future. Now, this makes investors nervous because slower rate cuts could mean less support for the economy in the near term. Now, Trump's plans for tax cuts, higher tariffs, and stricter immigration policies could make inflation worse. If that happens, the government might need to borrow more money, adding more pressure to the economy. Now, domestically, India's GDP growth slowed to 5.4% in the July to September quarter, which is the lowest in 7 quarters. On top of that, corporate earnings haven't been that strong. Now, the big question now is how private investments and exports will pick up, because these are the key to driving the next phase of growth in India. Now, looking at the bigger picture, India's long-term fundamentals remain solid. The country has strong growth potential, and there's even a possibility that India could overtake Japan to become the 4th largest economy in the world. So while the current slowdown is concerning, the future looks promising. So what are the key takeaways for you as an investor? First, don't panic. Market corrections like this are normal and often temporary. If you're investing for the long term, there's no need to sell your investments in a hurry. Second, consider investing systematically. Lastly, look at this as an opportunity. When markets dip, some of the best companies are available at low prices. Focus on businesses that have strong fundamentals and good growth potential. These are the ones that tend to bounce back when markets recover. Now, 2024 has been quite a remarkable year for IPOs. Investors are really excited, either hoping to make some quick profits from the listing day gains or betting on companies that have great long-term growth potential. Now, even though the overall markets have been down, some recent IPOs have seen really strong listings. For example, MobiKwik Systems had a fantastic listing gain of 57.7%. Then we have Inventurus Knowledge Solutions, a company in the healthcare service space, which saw a 43% listing gain. Now, Vishal Mega Mart, the popular retail brand known for its great prices, had a solid 33.3% listing gain. And Sai Life Sciences, a company in the pharmaceutical sector, also saw an 18.4% gain on its listing day. So despite a tough market environment, these companies have done really well on the debut. It shows that there's still strong investor interest in good quality IPOs, even when the broader market sentiment is a bit shaky. Now moving on to some upcoming IPOs ahead of us. There are 5 IPOs hitting the market this week from 19th to 23rd December. Let's break it down. The biggest IPO in the space right now is coming from DAM Capital Advisors, a well-known player in investment banking and financial services. Now, DAM Capital is one of the leading merchant banks in India with a solid market share of 12.1% according to the company's RHP. Now, this is based on the number of IPOs and qualified institutional placements that they've handled as the book-running lead manager. Now, around 54% of the company's revenue comes from its merchant banking business, and the rest of the revenue comes from stockbroking. Now, the company is looking to raise a total of 840 crore but is completely an offer for sale, meaning the funds won't be going to the company itself but rather to the selling shareholders. The price band for the shares has also been set between 269 to 283 rupees. Now, close behind in this race is Transrail Lighting Limited, which is looking to raise 838 crore to its IPO. Now, this will be a mix of both fresh issue and an offer for sale. The price band for the IPO is set between 410 to 432 rupees per share. Now, this company is an Indian engineering, procurement and construction company that primarily focuses on the power transmission and distribution sector. Now, the company designs, manufactures, tests and installs towers, conductors, steel and street light poles, street lights, refineries, etc. Now, most of its revenues comes from power transmission and distribution, followed by civil construction, poles and lighting and railways. On the other hand of the spectrum, the smallest IPO in terms of issue price is Mamta Machinery Limited, which specializes in manufacturing solutions, particularly for the FMCG sector. For fiscal year 24, a major chunk of its revenues comes from bag and pouch making machines, accounting to about 63% of the total revenues. Now, moreover, Mamta is also an extensive global sales and distribution network and are now focusing on emerging markets such as Asia Pacific and USA, European Union, amongst others. Now, they're looking to raise about 179 crore with an upper price band of rupees 243. Interestingly, while Mamta Machinery has the smallest IPO size, it's creating a buzz with the highest grey market premium of 62%. Now, let's talk about Concord Enviro. The company was incorporated in 1999 and specializes in providing engineering, procurement and construction services for wastewater treatment. Now, it has a strong international presence. In fact, exports contribute about 42% of its revenues in fiscal year 24. When we look at its client base, Concord's top 10 clients account for about 55% of its total revenues. Now, the company is aiming to raise about 500 crore rupees through its IPO, which will include both a fresh issue and an offer for sale. Now, last is Sanatan Textiles Limited, which is engaged in the business of manufacturing textile yarn. The company's business is into 3 separate yarn business verticals, with a major chunk of revenues coming from the polyester segment. The total issue size is 550 crores, which includes 400 crores of fresh issue, which the company will utilize for payment of loans and other general corporate purposes. Now, these are the IPOs that are expected to open today. If you want us to do an in-depth analysis of any of these IPOs, do let us know in the comment section. Having said that, this is Neem Merlin signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.